Councilor Robinson, Councilor Gardner, Councilor Grenier, and myself. And we are joined by Casey Leonard from Runyon, Kirsten, and Willette. And the purpose of our meeting this afternoon is to hear any significant findings from our audit and to ask some questions if we have them about our audit. We'll have a chance to go over it again later this afternoon when we have a chance to accept the audit. Sophie, do you want to do anything by way of introduction or? You're muted.
I would just remind folks that we've worked with Casey for the last couple of years. He was our initial auditor and then kind of transitioned out of the field for us and back in a couple years ago. I have asked Connie to join us simply because Connie and her staff are instrumental in the audits that we receive and working with Casey. And I turn it over, and I think everything went fairly well this year.
Everything went very well this year. Yeah, this was a unique year. So usually we're on site for a week and a half between our pre-audit work and our actual field work. So this year, because of the pandemic, we did everything remote. So a big thank you to Connie, to Sophie, to everyone in the finance office. There was definitely a lot of extra work this year in terms of making that happen. So I do want to thank everyone. And I think things went very well this year. I put together a little PowerPoint presentation, which I'm going to try and share on my screen. And it kind of just highlights some of the more important parts of the financial statements. And as I go through these, if you have any questions, please feel free to jump in. Okay.
There you go.
Modern technology, pretty neat. So this first graph here just shows a summary of the audit results. So just kind of an overview of things. In terms of the opinion on the financial statements, that the town received an unmodified opinion, which means the financial statements are fairly stated in accordance with generally accepted accounting principles, or it was a clean opinion, which is what the town wants. In addition to the financial statement audit, we also performed an audit in accordance with the government auditing standards, so often called a yellow book audit. So here we consider the town's internal controls over the financial reporting process. So we look at all the procedures that are in place that help to ensure that the year-end balances are materially correct. We also perform tests of the town's compliance with certain laws, regulations, contracts, and grant agreements. And I'm glad to say that we didn't have any material weaknesses, nor did we have any significant deficiencies. So we had a clean opinion there as well. We did have one recommendation, and that was for capital asset records. So when I'm talking about capital assets, I'm talking about all the buildings, equipment, vehicles, infrastructure. And so when we're looking at the listing for capital assets that we received during the year, we noted that the construction in progress activity wasn't grouped by project, new additions weren't assigned depreciable lives, and sewer fund capital project entries weren't made to recognize current year activity. All these were pretty minor. What we actually received was pretty good. I would say we were, probably 90% of the way there. And so these are a few recommendations just to kind of, fill in those missing pieces. Also, in terms of the capital asset records, we recommend that the town complete a full physical inventory of its capital assets. It's probably been a number of years since that's happened. So the accounting standard that related to recognizing this, it's called GASB 34, Governmental Accounting Standards Board pronouncement number 34. That actually came into play in 2004. So for a lot of our clients, they haven't gone back and done like a full inventory observation. And so we're recommending not only to Orono, but to all of our clients to kind of go back and take a look and make sure that you don't have anything that's obsolete, or, we often find things, that, on the listing, we'll have things at the fire department that they haven't had in 10 years. So it's really just, it's probably that time. Sophie and I talked about it. So it's probably that time that the town went through that process. So that was kind of our recommendation for the year. On this next graph, we start to get into some of the financial results for the year. So this first graph shows general fund balance, and it's an analysis over the last few years. So if you take your total assets less your total liabilities and deferred inflows of resources, you're left with the equity position of the fund balance for the town. And we take fund balance and we kind of carve it up into 4 different categories. So we have non-spendable, restricted, assigned, and unassigned. And there's definitions of what each of these means. And I'm just going to quickly go through this. So non-spendable fund balance represents resources which can't be spent because they're not in a spendable form. So specifically what's included in here is inventory. Inventory can't be easily converted to cash, and so we're required to put it into that non-spendable category. Restricted fund balance comprises resources with constraints placed on their use externally. So these are amounts that have strings attached to them. And specifically what we're talking about are your TIFs, your tax increment financing agreements. You know, those are all supported with agreements with the state. And so any remaining balances really have to stay in that category. It has to be, consistent with the TIF agreements. And so we have to put it into that restricted category. And then assigned fund balance represents resources that are constrained by the town's own intent. So as opposed to restricted fund balance, which is set aside by third parties, the assigned fund balance is really amounts that have been set aside by the town, by the council. So in here, we have about $400,000, which was use of fund balance for the following year budget. So the town set aside $400,000 to balance the 2021 budget. That assigned fund balance also includes reserves, of which there are numerous. And there is a note in the financial statements that kind of goes through, what's included in there. I'm not gonna go through all the detail, but if you want to take a look at a later point, you can get a sense of what's included in there. And then unassigned fund balance is what remains after amounts are recognized in other categories. It's essentially what's left over. And that decreased by about $81,000 between 2019 and 2020. On the next few graphs, we have some budget to actual comparisons for the general fund. So this first one shows general fund revenues. In total, revenues were about $160,000 under budget. And there's some descriptions or some observations here of why that happened. I'm just gonna go through each one of these. Tax revenues were under budget by about $125,000. And that was primarily due to the effect on the pandemic on tax collections. The effect of the pandemic, obviously, is, you're going to see that theme throughout the revenues and the expenditure variances here. Intergovernmental revenues were over budget by about $46,000, and that was primarily due to greater than expected state revenue sharing and other state grants and reimbursements. Charges for services were under budget by about $99,000, and that was primarily due to greater than expected fees related to ambulance services. Also, I think you could correlate that with the pandemic and the effect that had on your ambulance fees. And other revenues were over budget, and that was primarily due to the receipt of an unbudgeted Maine Criminal Justice Academy training reimbursement. The other thing I wanted to point out when looking at this graph is below revenues, you have some other financing sources. So you have utilization of assigned fund balance and use of prior year surplus. You see amounts in the budget column, but not in the revenue column. And that's because as part of the 2020 budget, the town chose to use a portion of its fund balance. So these aren't new revenues. You're really just using resources that you already have. It does look a little funny. It often raises questions, so I did want to point that out. As for expenditures, including the transfers out, were about $772,000 under budget. Again, some of the larger variances. General government expenditures were under budget by about $328,000, and that was primarily due to lower than expected costs related to assessing and tax abatements. Public safety expenditures were under budget by about $142,000, and that was primarily due to lower than expected police department costs, and that was mainly caused by unexpected vacancies. Public works expenditures were under budget by about $193,000, and that was primarily due to lower than expected costs related to contracted services, salt and calcium chloride, salaries and health insurance costs. And finally, capital expenditures are under budget by about $403,000. And that also was due to COVID-19, which affected construction activities. Now, those unspent amounts have been carried forward to 2020 with the idea that, those projects are going to eventually pick up. So they are included in your assigned fund balance for the following year. Graph 6 shows a revenue distribution for your general fund. So this schedule shows the 3 single largest revenue sources for the town in 2020, that being taxes, intergovernmental revenues, and charges for services. So taxes include property taxes as well as excise taxes. Intergovernmental revenues primarily include state revenue sharing, homestead, and UMO reimbursements and other miscellaneous grants. And charges for services includes fire and ambulance fees and other miscellaneous fees. So, kind of big, I only have two years here, but big picture, taxes decreased by about 2%, and intergovernmental revenues increased by about 3%. Often we'll have, 5 or even more years. The town, I think in 2018, kind of changed what was included in the general fund. We kind of did a resorting. So it was a little distorting when I was including some of the information that was older. So we only have 2 years at this point, but I just want to give you kind of a sense of where things were going in terms of your revenues. Graph 7 shows unassigned fund balance as a percentage of budget. So this is one of those metrics or calculations that we look at in the governmental finance arena. And we usually will recommend 1 to 2 months worth of expenditures, which equals 8.3 to 16.7%. As of June 30th, 2020, for the town, that equaled 9.65%. So you're in the range of what we usually recommend. And I think the town's in a pretty good position. You're not overly dependent upon one very large taxpayer. You're not a mill town where if the mill were to leave tomorrow, it would be very detrimental. Obviously, you have the university and you're dependent upon the university, but the university has been there for a long time and it's going to continue to be there. Your collection of current year taxes is very good. The current year collection rate was at about 98%. The other thing too, that I wanted to point out is that you have over $3 million in reserves, which other communities may or may not have. So, you've kind of planned for some of these things that unassigned fund balance or kind of the rainy day fund would be set up for. So I think the town's actually in a very good position at about 10%. And then the final graph here shows expenditures in a pie chart. So just a different graphical way of looking at your expenditures. So when you look at this, you can see your 3 largest categories were education at about 40%, public safety at about 21%, and public works at about 9%. So nothing too dramatic, pretty consistent with, in between years for the town, also pretty consistent with what we see for a lot of our other communities or other towns and cities that we audit. I don't think there's anything that really stood out here. So that was pretty much everything that I had. But I'd be happy to answer any questions with, in regards to the graphs or anything really related to the audit.
So any questions from folks?
Casey, is it possible to go back to that pie graph? I just have one kind of question. It's more clarity than anything for me. The pie graph, can you see? Well, and maybe I can just remember, what's it? It's okay. Where it says public services and public works, how is, and maybe Sophie can help, how is that all divided? Public services, I understand public safety and public works. Where does public services fit in there?
Public services is the library,
Okay,
the Parks and Recreation, and facilities.
okay. Thank you, Sophie. I just had that question. Thank you.
So Casey, if we were to look at the page in the report that best describes the activity for the year in terms of revenue and expenditure, where would you direct us? Would it be page 16 or would it be in the back where?
No, it would probably be in the back. It would be A2, which is on page
56,
54.
57?
54
Okay.
is your budget to actual comparison in detail. There's also a
good.
more aggregated one, but this is probably what I would look at.
So when we ask the question, when you look at all of the revenue that came in and all the expenditures that went out, the bottom line is that we ended the year.
You ended the, well, this is where things get a little confusing.
Yeah. No.
I mean, we have a presentation here that is consistent with the way that you budget for your revenues and expenditures. Okay. That is not necessarily the way that we need to present your revenues and expenditures to be consistent with generally accepted accounting principles. The difference for the town has to do with the way that you account for your reserves. So in terms of your financial statements, I include your reserves in the general fund. But I think the town budgets for the reserves as though they're not in the general fund. So on a budgetary basis, fund balance decreased by $614,000, which is on page 57.
Yep, I see that.
On a GAAP basis, again, I don't want to get too far into the weeds because this stuff can be, it can be pretty messy. On a GAAP basis, it decreased by $936,000, which is on, that would be on statement 4, which is page 14.
So Casey, when I look at this, and based on the conversations we've had with our rating agencies,
Yep.
What this shows me though is that we performed better than what we anticipated when we adopted the budget at the beginning of the year.
I believe that statement is true because you budgeted for your fund balance to decrease. It didn't decrease as much as you had budgeted it to decrease. So yeah, you know, that's true. That's definitely true.
Okay.
So yeah, you budgeted your fund balance to decrease by about 1.2 million. But it decreased, at least on a budgetary basis, by 614,000. So yeah, you did do better.
That's good.
Yes.
And Sophie, was that because of revenue sharing, state revenue sharing that we didn't anticipate?
I think part of it was. I think part of it was also, if you look, when COVID really began to hit in late February and March, we adopted a position here where we stopped spending anything that really didn't need to be spent, which is why you see such a remaining budget left at the end of the year on the expense side. And so I guess that would be my answer. The issue is definitely not that we outperformed on the revenue side, because we were about $160,000 in the hole
Right.
on the revenue side. But some of the way, so Casey and I have really interesting conversations when he's here for the audit, because we definitely see our books differently. But I think we get to the same place at the end of the day. But I think we think more on it with cash brain as opposed to an accrual mindset. And I think a lot of the place where you see the the positive variance on the expense side has to do with infrastructure, which we don't consider that really leftover money because we're going to spend that money. But it's the way Casey carries it forward and accounts for it that I think, for me at least.
Any other questions for Casey?
Sophie, you could probably answer this a bit for me. So in looking at understanding that the majority of our money obviously comes from the tax base, and also understanding that we've been going through the valuation process, what portion of that's already been kind of added into, because I'm assuming that valuations are going up, and what do we have that you see for like next year that will say we're actually going to be at this threshold as opposed to where we're at now?
By threshold, do you mean tax rate, or do you
Yeah,
mean?
everybody, like, where this was like in 2020, was any of that revaluation factored into what the tax receipt was? So we
No.
should see a different number the next year.
So I expect our assessed valuation to be quite different this coming year. But remember, the dollars that we need to collect will likely remain similar. And so whether it is a higher home value and a lower mill rate, or a higher mill rate and a lower home value, the dollars that come out of people's checking accounts will be very similar, unless our need, either we increase revenues or decrease expenditures. Did I answer that? And the second part of the question that I'm not sure you asked, but I'm going to answer anyway, is we have gone through and done the field work for the reval. Right now, we're going through finalizing some problem properties. Residents have received letters asking them to schedule appointments to look at their new value, which will change, I'm going to guess, some of the values. And we will roll that all at the same time, because what is critical for the town is that we are assessing in an equitable manner, meaning the pieces of the pie are right. Right now, we're just resizing the pie, but we want the pieces to be fair.
Thank you.
Any other questions for Casey? We got another opportunity to ask Sophie questions. I'd just like to say, Casey, I appreciate your complimentary comments on our finance staff. We've worked hard to get a good finance staff in place, and we're happy to have them there. And Connie, thank you for joining us, and we appreciate the job that you and the folks that work with you do. Secondly, it was nice to hear that there were no significant adverse findings in the entire audit. We appreciate that. And we appreciate the suggestions you have for going forward and doing the inventory that would be helpful. And that's one of the reasons that we wanted to go with RKO, is that we get some good suggestions and positive comments. So thank you for doing that.
Certainly.
Anything else that we need to deal with here? Casey, thank you for your time.
Of course.
Can we get a copy of those nice graphs that you had?
Certainly. Yeah, I can
Great.
email them to Sophie.
Thank you. We'd like to have those.
Yeah, no problem.
Sophie, we are scheduled to start our regular meeting at 5 o'clock. So I assume we're going to sign off for this meeting and then come back at 5 o'clock, since we've already advertised our meeting for 5.
Yeah, I think that makes the most sense.
Yeah.
And it gives you guys a little bit of a break.
Just
And
use the same Zoom link. Oh, sorry.
Not just exactly what I was going to ask, Cheryl. We use the same Zoom link to get back in at 5 o'clock.
Yep.
Okay. Well, thank you all. And Casey, thank you.
Take care, folks.
Yep.
Thanks,
Bye-bye.
Casey.